Before I open it up to questions from the floor, I just want to bring up the mega mergers we've been seeing in our industry. Of course, most recently, the purchase of Goldcorp from Newmont. This, obviously in September, we saw Barrick by Randgold. Do industry insiders on the mining space, and I'll ask this to you first, Frank, have a sense of where price is going? Why are we seeing these mega mergers happen right now?
I think that the concern is peak gold. And they're trying to go out and merge and get economies of scale. And I think that's the big rush. We've not seen this explosion in the mid-cap space yet, right, but we will. As Denny showed his chart, that the amount of money that was blown looking for gold, there's no big major discoveries. So the cheapest gold assets are actually public. And so I think it's I also believe that Randgold taking over Barrick is not good for Canada. I don't believe that Newmont taking over Goldcorp, they'll say they'll keep an office, but really the process of a junior mining company or mid-cap dealing with Newmont versus dealing with Goldcorp is so different. And the same thing in dealing with Randgold versus Barrick. They're different animals, but we're seeing this sort of intellectual capital leaving the country. I think that this allows new entrepreneurs a great opportunity to fill the void.
So, and you think we'll see more and more deals come out of the mining space this year?
Absolutely.
Any other thoughts on that?
I think the gold mining industry can be much, much bigger than we even imagine. If you take all the gold that's mined every year, or say in the last year, it was about $80 billion or $100 billion. I mean, that's nothing. It's nothing comparative to, say, the earnings of Apple, but it's also nothing just comparative to how much money has been printed. And if we revert back to a gold standard system or a quasi-gold standard system, which people like me genuinely believe that, the natural order will exact this revenge. We will have to get back to real money again. Then mining companies earn seigniorage rather than government. They become the issuers of currency, and it's good for the economy because, mining is like construction on crack. You have to have engineering jobs and construction jobs, and you have to go somewhere new and build a town and build water. So I think the gold mining industry could be way bigger in 10 or 15 years as some of these trends manifest.
Yeah, I think the interesting thing about the mergers that we've seen so far is, the lack of excitement that it generates in the sector, and it shows you how bad the sentiment is. That normally when you have some M&A going on, people start trying to think, who's the next one to get bought, and maybe there's a little bit of a premium that starts getting built in to other stocks. Gold stocks are down this year. I mean, even though the price of gold is up, price of gold is off to a good start this year, and gold stocks are down. And it's just that the sentiment is just so bad.
We did feel some energy with the Randgold purchase, not so much with Goldcorp. Right.
The big part is that for all the quant funds, it became a liquidity, so they could get exposure and they could move big dollars. Now that is sort of weighing off. So I think that the regulatory world, to understand the SEC for the Federal Reserve, has been pushing that small cap stocks have, in a mutual fund, all these restrictions. And now Wells Fargo's, Merrill Lynch, etc., they won't allow you to buy any market cap under $200 million. And they won't give you any margin of stock under $10. And so you're seeing this push away from micro caps, so they're becoming cheaper and cheaper. But I'll give you another, where's a bear market. It's the financial sector. Yeah. I was looking at CI funds, which is the big animal here in Canada, trades at 6 times cash flow. With a 5% close to dividend. The margin compression in asset management company business is also just like the gold mining business. So they're positioning for an inexpensive way if you're a GARP investor that when this turns, it turns so fast.
Yeah, I think there's still an element that they're working on in the industry of rebuilding, let me say it that way, rebuilding trust for the investor. Especially in the junior space. So, and I think they're working on that, and I think the gold mining space will come out of it on a positive note, but I still think there's more work to do there. Yeah. I think that's why you're probably still seeing gold mining shares underperforming the actual price of gold in the market. I mean, if you just look at August of 2018, the low of 1160, and then the Fed move in December of 2018, Gold's up $150 in the space of 7 months. I mean, that's pretty impressive. That's 12% in U.S. dollar terms just over this last cycle since the August low of last year.
Just to wrap on the merger talk, when I spoke with Rob McEwen last week, I thought it was interesting. He felt that Barrick got the better deal than Newmont with the purchase of Randgold versus, if he had to compare both deals, he
Did
thought
he?
that.
And
yeah.
why did he say that?
Well, I thought it was interesting as the former CEO of Goldcorp. But in terms of project, in terms of property, that Randgold was a better acquisition. So we'll open it up to the floor now. I believe there's 2 microphones.
The recent purchase by China was announced. I could start if you want my view. That's just BS. They have that was a signal, in my opinion, as part of the game theory between Trump on tariffs. I mean, I genuinely, when I got into this industry, I thought everyone that thought this way was a tinfoil hatter. But I've had some experiences the last few years, and I now realize that really gold is the fulcrum collateral money that governments deal in. And I think that's what that was meant to do, because China has way more than 3,000 tons, and that's what I think they did there, because there was really no point. If you read, the PBOC governor once wrote a speech, and it was in Chinese, and he talks about how, if China wanted to, they could just buy all the gold in the world, but they wouldn't do that unless they really needed to. And I think that they fully understand gold, and that was just a signal.
Yeah.
And just to complement that, the largest hedge fund in the world is Ray Dalio's Bridgewater. And he always has an exposure to gold. And interesting enough, the only leader of a country follows Ray Dalio is the 2 leaders that run China. So they're much more sophisticated than most governments, much more than Justin Trudeau here. Mm-hmm. And looking at gold as an asset class is of a country that's a dominant player and how you position it. So I think Ray Dalio's model is a reason for China buying more gold.
Yeah, and also, too, what's going to happen, we're very much politicizing the Chinese trade surplus with the United States, which is at an all-time record high. We're putting pressure on the Chinese to diminish that surplus. And, the reason that they have, invested so heavily in propping up the dollar was to, preserve that surplus. But to the extent that they're not going to run as large a trade surplus with the United States, then the value of the dollar is not as important to the Chinese. And meanwhile, the Chinese have already now started talking about the fact that, they're going to go spend $1 trillion in the U.S. over the next 6 years. If they're going to start spending dollars, they're selling dollars, because they're not going to, and I don't know what they're going to buy, because we don't really make anything that they need. But they can buy stuff. And maybe some of the stuff they'll buy with that $1 trillion is some of our gold. We can certainly export gold, and they can liquidate some of their treasuries. So I think the fact that if the Chinese are going to be going into gold, that's very bullish for gold and bearish for the dollar. And of course, anything that's bearish for the dollar is automatically bullish for gold.
And the one thing, we have an office in Hong Kong, and 2018 was actually a relatively slow year for Chinese gold demand. Coming out of our Hong Kong office, which surprised me a little given the rally in gold that we saw from August of 2018. But I think what it was with the Chinese consumer, because of this trade war, there is uncertainty. So the Chinese are starting to step back a little bit on their discretionary spending, and you can see that in things like Tiffany stock. They're just nervous. And if there was any kind of solution that were to come out of these China-U.S. trade talks, I think the Chinese individual will get back into the gold market, and that's another element of demand that's been missing for about the last quarter and a half.
One more question, gentleman at the microphone.
Yes, a very self-serving question here for kind of a new participant in the gold market. Of your allocation that's all gold, so you're just talking gold now, in your opinion, what proportion would be physical versus stock? Is that a 50-50? Physical versus stock, or something else?
I write about this. It's the 10% golden rule, and I've always suggested 5% into either coins or 24-karat gold jewelry, and the other 5% into high-quality gold stocks. If you don't want to speculate with the new story, then you take a look at the royalty companies. They're the most stable. They have this most superior business model, like the Franco-Nevadas and the Wheaton Precious.
Yeah. I mean, I think, first of all, they're two different animals. I think gold is to preserve your wealth. If you've worked your lifetime and you don't want inflation to wipe out the value of what you saved, you buy gold to be defensive. Right? There's nothing defensive really about gold stocks. I mean, maybe as part of a stock portfolio, if to the extent that you can get some negative correlation, maybe they could take some risk out of an overall portfolio. But I look at the gold stocks right now as an opportunity to actually increase your wealth, not just preserve your wealth. Because if I'm ultimately right on where the price of gold is going, then gold stocks are going to go a lot higher. And right now, I think gold stocks actually reflect what everybody believes is going to happen to gold. And the vast majority of investors think gold is going down. They have no idea why it's still $1,300. I mean, they think it's going to collapse. So I think that all these bad expectations about a future collapse of the price of gold are already priced into the gold stocks. So you've got so much upside in these stocks if everybody is wrong and gold goes up instead of going down. And so, but you've got to diversify because, there's a lot of gold stocks. There's a lot of risk in that business, in the mining business. That's why, I've got a fund. Frank's got a fund. In fact, my fund, the Europe Pacific Gold Fund, which is managed by Adrian Day, who's also here, we're registering that fund in Canada. So for the first time, I think maybe in another month, Canadians will be able to buy our mutual fund in Canada. They haven't been able to do that. And we actually, I think we were, for a while, we were rated, I think, #1 over the last 5 years. We got, 5 stars, so it's a good fund. And I'm glad that we're finally taking the time to get it registered so that Canadians can invest in it, so that, you can have somebody professional manage your portfolio and get a better diversified group of mining stocks to benefit from this bull market.
Just one point. If you're going to buy physical gold, I'm assuming most of the people in this audience are Canadian. Most of my conferences that I attend, when I speak to Americans. They usually are not too thrilled when I get off the stage. When I speak negatively about an American Eagle as being a good gold coin investment. Canada has the advantage of buying the gold maple leaf. It's a 4/9 gold coin. You can also buy 1 ounce 4/9 bars from the Royal Canadian Mint. Now, the Americans make the Gold Eagle and they make the Buffalo. The Buffalo doesn't really have a lot of demand. The problem with the Gold Eagle, if you're considering it, is there's very little liquidity of gold on the Gold Eagle in Canada because dealers basically bid down on that product because it's a taxable item when you sell it. So there's very little demand for Gold Eagles in Canada. There's virtually no demand for Gold Eagles out of Hong Kong. So when you do buy physical gold, you want to consider trying to get it as close to the gold price as possible. But also, if you're going to buy gold as possibly a geographical diversifier, in case you ever got to put it in your pocket and get on a plane, buy gold that also has liquidity in other markets.
Well, I can tell you maple leaves are the only thing I've bought.
I want to be clear on one thing. This is the most important thing that you're going to take when you learn about the gold industry. When I say gold, I only mean physical gold. That is what gold does as savings. And there's so many different ways to buy it, but it's very simple. What's the weight? What's the price of gold today? Your job is to try to get it as close to the real price and not get tricked into all those other words and things. And now, that's gold for savings. That's gold as money. That's gold for measurement. That's gold. That's when I say I own 30% of my wealth in gold, that kind of gold. There's ways to make money on gold, but they're very difficult. It's kind of like being in a race and trying to catch gold, which is always difficult to catch. But it does work sometimes, and that's what gold miners do. That's what a company like Monet is trying to do by selling gold jewelry. And if you buy our shares, you're speculating on the possibility of us succeeding in that. But we could also fail. Most companies fail. But gold is just the physical gold, the weight, AU. That's all it is.
Roy, thank you for that. That's going to be our final comment because we are over time. But thank you for this amazing panel. Peter, Roy, Peter, Frank, thank you so much. And good luck, gold investors.